Hi there, welcome to kneppyinvests. In this video, I'm going to be discussing one of my favorite companies on the ASX. That is Electro Optic Systems, or simply EOS, which also happens to be their ticker code. EOS released their Appendix 4C in April, late April 30th, if I remember correctly. And the market reaction to that financial report was quite negative. The share price decreased 10% on the day and has kept on falling since then. So I'm going to be discussing the Appendix 4C and maybe figure out why the market reacted quite negatively to it. Is it just negative market sentiment, that sort of thing, or was there something in there that we as shareholders should be nervous about? I will also discuss two announcements the company has released in the past 5 weeks. One of those announcements was in regards to lasers, and who doesn't love lasers, particularly when it has to do with space and space debris mitigation. The other announcement they released on the 12th of May was in regards to future cash receipts, and I think this was a response from the management to the share price decreasing from when they released their Appendix 4C. So I'll discuss both of those announcements and look at the market reaction to both of those announcements as well. Before we look at the Appendix 4C, first we'll just discuss a few of the facts around this company. Electro Optic Systems, or EOS, has a market cap of $625 million, which in my opinion is quite generous. And when I say generous, you could probably argue that it's not too expensive and not too cheap. Particularly on the not too expensive side, when you look at their revenue, $180 million in the previous financial year, and that number is growing year on year. And you could argue that it's not too cheap either when you look at the fact that they are operational cash flow negative by $109 million in that financial year. So in financial year 20, they weren't profitable, but the previous 2 years they were. So that also could turn some people off. Now, there is a really logical and rational reason why they burned through so much cash in that financial year. It's all about building up their inventory to satisfy all the contracts they have to fulfill in the future. So that old saying really pertains to EOS. You have to spend money to make money. And that's exactly what they did in financial year 2020. And hopefully the next few years, we're going to see massive amount of cash flow coming into the business and highly profitable. And that revenue will really skyrocket, mind the pun there. PS ratio only 3.5, so it's not too high there. But that's sort of what you'd expect for this sort of company where in the stage they're in right now. If you do like this company, when what I'm talking about, and you don't know much about it, I do highly recommend looking at some of their announcements, going to the website, a plethora of information on the website, and you can have a look at their Appendix 4C that they released on the 30th of April. On to the Appendix 4C for EOS. And the first thing I look at when I see an Appendix 4C being released by a company is Section 1 of the Statement of Cash Flows, and that is the cash flows from operating activities. It's one of the most important part of any financial statement you can find. Some say numbers don't lie, but they can be manipulated, and they will be manipulated legally by accounting teams, and management will endorse that manipulation. So anytime you look at the profits for a company, you just have to bear that in mind, that the profit you see being reported by a company can be manipulated. So what you want to do is to try to find numbers that are least likely to be manipulated, and you can find that in the cash flow statement. In fact, in my opinion, Section 1 of the cash flow statement is where you're least likely to find manipulated numbers. So that's one of the reasons I like it. The second reason I go straight to this section is that you do get a good sense of how the company is performing by looking at these numbers. So the first thing I always look at is receipts from customers. Now, EOS has a slightly different reporting season or calendar. So this is their first quarter of their financial year. So they report in the calendar year sort of cycle. So in the first quarter of their financial year, they received $51.4 million in receipts. That's quite a bit higher than the previous 2 quarters. But most importantly is right down the bottom is where you see if a company is operational cash flow positive or negative. And for EOS, they were negative by $12.6 million. And that could be the reason why the market reacted negatively to this financial statement, with the share price decreasing 10% on the day they released it. And one of the reasons they are highly operational cash flow negatives is because some of their costs, we can see that product manufacturing operating costs $35.8 million, and that's fair enough. Sometimes you have to spend money to make money. But when we look at staff costs and admin costs, that could be maybe too high for this sort of company. So $11.6 million in staff costs and admin costs at $7 million. So I am wondering right now whether they could pare that back to improve their cash flow. Another thing you'll see here is they did pay $4.7 million in income tax in this quarter. And the reason they paid income tax, even though they weren't profitable in financial year 20, was, in my opinion, because they were profitable in financial year 19 and they did have an income tax burden. So I'm thinking that's why they had to pay income tax this quarter. So if that's the reason why, this is a one-off and the cash flow burn wasn't quite as bad as what they show here. So how much cash do they have on hand at the end of the quarter? Well, $41.5 million. So they still have a few quarters of cash to burn through if they maintain these sort of numbers or cash burn rate. But in saying all that, they do expect significant amount of cash to come through all the contracts they are fulfilled in recent times. And that's the reason why they put out an announcement on the 12th of May. And I'll get into that announcement once we get towards the end of the video. In the previous slide, I didn't really mention that looking at one quarter's receipts in isolation doesn't really tell you enough, because you really have to know the trend of the receipts. So when I say 51 million, you don't know if that's the highest quarter receipts the company has received or the lowest. So maybe it was a bad quarter or maybe it was a good quarter when it comes to receipts. So in this slide, I'm showing you the receipts history of EOS going back to July 2013, when I started this process with this company. So I've been following this company for over 8 years. If you look at the receipts history from July 2013 to 2018, it was just going sideways, no real growth there at all. And then we started to see receipts growing from 2018. EOS was affected by COVID-19, a lot of deferred contracts. They had a hard time exporting some stuff as well. So we did see a bit of a dip in EOS's cash receipts in July 2020, in October 2020. In fact, it dipped all the way down to 13.8 million in the third quarter of the calendar year. But we have seen receipts really take off in the last 2 quarters. In fact, their most recent quarter with 51.4 was by far their record quarter. And in my opinion, this is just an opinion, I do believe there is potential we might see that number significantly improved in the next 3 quarters. So I think there's 1 quarter at least we might see cash receipts approach $100 million. So we'll have to wait and see. When you do calculate the compound quarterly growth rate since July 2013, they've been growing receipts at 6.4% per quarter. That's a fair enough growth rate. But I did calculate over the last 3 years, and they've been growing receipts at 14% per quarter. So that's fairly good numbers for this type of company. And if they continue that sort of growth rate in the future, we will be looking at a significantly higher value company in 5 years or so. Now onto the charts for EOS, and the first stop here is just the 3-year weekly chart. I did look at the 5-year weekly chart, 10-year monthly chart, so I like to look at different time frames for a company just to see how the company share price has performed, where you might see some resistance, some support levels. And when you look at the weekly chart for EOS, you can see where sentiment shifts quite well here. So the first shift from sort of a neutral to slightly negative sentiment to a really highly positive sentiment shift was in April 2019 or May, when we saw the share price go above $3 on okay volume. And we saw the share price actually triple over an 8-month period. So it went from $3 to over $10, and that's just before COVID-19 financial panic. And the market knew, in a way, that EOS might be affected by the COVID-19, and it was, and we did see the share price drop from $11 all the way to a low of $3. And since then, the COVID-19 share price has really struggled to recover from the pandemic. In fact, right now we have seen the share price try to get back towards the COVID-19 low at $3. Right now, as I do this video, the share price is just lower than $3.92. I think it was $3.88. So the share price is struggling, and there is a bit of negative sentiment here. I did have a look at Hot Copper Forum, and the main reason I look at Hot Copper is just to gauge shareholder sentiment. And I did find a lot of negative sentiment among some of the shareholders right now. There is potential. A lot of those shareholders are not really holders of this company, and they're just trolls. So there is that possibility as well. But there's no doubt that there is a bit of negative sentiment with EOS at this current time. And you can just see that with the weekly chart here over the past 4 or 5 months, with the share price developing into a nice looking downtrend. When we look at the daily chart for EOS going back 6 months, you can actually see where the sentiment shifted from a positive or slightly positive to negative, and that was in late 2020. And we did see the share price go below the 3 moving averages. So when you see the share price moving below the 3 moving averages, which is the 10, 20, and 50-day exponential moving averages, that just tells you there's a bit of negative sentiment. Now we've seen that, we saw that develop late last year, and the share price has remained mostly below those moving averages since then. And that's telling me whenever there is a positive announcement, there's going to be a fair bit of resistance there from the share price increasing. And funnily enough, on the 1st of March, we did see an announcement that saw the share price increase 18%. And that announcement was in regards to the director, David Black, buying or purchasing 10,880 shares. And we saw the share price increase 18%. Now, in my opinion, the share price not only increased because of that announcement, I think the shares were oversold at that point. And when shares are oversold, that is a good time for a bit of a bounce in the share price. And we did see the share price increase from $4.50 to over $5.50 a few weeks later. And then as soon as it got just above $5.50, we did see the share price pull back on low volume. It tried to get above $5.50 again on another positive announcement. I'll talk about that announcement in the next slide. But then we saw a little bit of weakness leading into their Appendix 4C. And when EOS released their Appendix 4C, a lot of negative sentiment came about because of that announcement. You can see that on Hot Copper forums. A lot of shareholders just did not like this announcement, this financial report. In my opinion, there was nothing wrong with it, but that doesn't mean anything. Just because I have an opinion, the market is more powerful than I am. In a way, it's even more, well, say smarter than I am, but I can disagree with the market sometimes. So the share price fell 9% on that day and has kept on falling since. We saw another positive announcement released by the company a few days ago from when I did this video. The share price did bounce, but because of the negative sentiment, because we have a lot of these shareholders who have bought at a high price in the past 6 months who now think this company is a dog stock. So a lot of investors don't care about the potential of the share price in the future. They just care about what the share price is doing from when they bought in. And if the share price is falling after they bought in, they consider a company a dog stock. So right now, there's a lot of shareholders in EOS who think it's a dog stock and want to get out as soon as possible. So when they see the share price bounce, even if there's good news there, that's their opportunity to sell. And we've seen that in the last few trading days. And right now, the share price has fallen again below $4. The further the share price falls, the more attractive it becomes to those who want to hold this company for the long term. So the more I see the share price fall, I know eventually in the future, sentiment will shift. So all I have to do is wait for that shift in sentiment, and I'll buy some more shares in this company. But the whole question is, when is that sentiment going to shift? Well, we don't know, but we can just wait for signs of that shift. And those signs usually are when the share price starts to consolidate. We'll see the moving averages come together, and then we'll just have to wait for a positive announcement from the company. And more than likely, that positive announcement, hopefully, will be a good financial report, because good financial reports are the most powerful announcement a company can release. EOS has released 2 interesting announcements in the last month or so, although the first announcement about lasers was released on the 9th of April. That's a little bit over a month ago. Anyway, that first announcement really piqued my interest because it was all about lasers. And who doesn't like lasers, particularly when you're talking about lasers and space? So EOS has developed a new laser technology for space debris mitigation. For those who don't realize, space debris is a significant issue. It's actually been in the news lately. I haven't really followed it. It's about that Chinese, was it a satellite that was falling to Earth, and they weren't quite sure where it's going to fall. And that just shows you that space debris is a serious issue right now, and it's going to become an increasingly serious issue in the next few decades as we pump so many satellites and other stuff into space to orbit our atmosphere. So not only are EOS but other companies are developing technology to deal with that problem. And EOS has this new laser technology, and I find that interesting, fascinating, and it's another reason why I love this company. Now, just after they released, 2 weeks after they released their Appendix 4C, I think there were quite a few people disappointed that they were operational cash flow negative. I think they focused on that aspect a little bit too much, even though they are growing their cash receipts quite quickly over the last few quarters. So in a way, I think the company put out this announcement to appease those who were concerned about the cash receipts, even though it was a record high. So they just mentioned they spent a lot of money on inventory over the past year since March 2020, and they had to do some capital raisings to raise the inventory. But the whole thing is, and there's a saying about this, you have to spend money to make money. And that's all to make money in the future, to increase their cash receipts that they're going to receive over the next few years. So they got cash on hand, as we mentioned, 41.5 million at the 31st of March. And since the 31st of March, so it's only been 1.5 months since the end of the last quarter, they've received $43 million in cash inflows. So just remember, the previous quarter they had $51 million in cash receipts, and they've already got or received $43 million. And that's in 1/2 of a quarter. So if they maintain that sort of cash inflows through the rest of the quarter, which might be hard because $30 million of that was from one contract, but still we might again see a record quarter from EOS. And they also mention that contract where they received $30 million from the COVID-19 affected export contract. They're going to receive $100 million more in the next 3 quarters. So a lot of more cash to come in this financial year from that one contract. So things are looking quite good for EOS over the next year in terms of cash receipts. And the market did react to this announcement quite positively. The share price did increase 10% on the back of it, but a little bit of selling in the previous 2 days has pushed the share price below the time they released this announcement, which I find fascinating and bewildering at the same time. In this slide, I'm just going to show you the market reaction to those 2 announcements I discussed in the previous slide. So the laser announcement on the 9th of April right there, and then also the cash receipts announcement on the 12th of May. So when you look at the laser announcement, it was a non-financial announcement, and those tend to be the weakest sort of announcements. So the strongest forms of announcements are financial ones, where there is some sort of news in regards to the financial state of the company. So if they put out an announcement that they were going to be cash flow positive for this quarter and more than likely for the next few quarters, there's little doubt the market would have reacted significantly different. So the market saw this announcement about lasers and it went, wow. So all those people out there who love lasers bought in, and the share price initially did increase. But it increased or started trading right on a resistance level. And that resistance level was the previous high. So what happens when a share price opens on a resistance level? It can go 2 ways. Share price can go higher because there's enough buyers in the market to cover all those sellers who want to get out. They have seen the share price go down from when they bought and want to sell out when the share price goes back up to where they bought. This is a natural human emotion. I see this all the time. I didn't believe it, but I've heard my colleagues at work say this exact thing. When the share price goes to where I bought it, I'm going to sell. And that's what happened when the share price of EOS opened at a resistance level. A lot of holders saw the opportunity to get out at the price they bought, and they got out. So there wasn't enough buyers in the market to cover all those sellers, and that's why the share price fell through the day, simply because it was a weak announcement. And from then, we saw a lot of weakness continue in the EOS share price. And when they released their Appendix 4C, that just exacerbated the weakness, the negative sentiment, and we saw the share price really pull back from $5 all the way to below $4. And when they released the next announcement on the 12th of May about the cash receipts, again, the market initially reacted quite well. In fact, at one point, the share price was up about 15%. But again, even though this was a financial statement, it was more positive than the laser announcement. There was a lot of shareholders who had bought in the previous month or so who were underwater or were feeling underwater and just wanted to get out. And there were a lot of them as well because the share price had gone down quite a bit in the previous month or so. So they found that opportunity to get out at a higher price than it was the previous day, and there weren't still enough buyers to cover all those sellers. Even though we saw a lot of volume on this day, there just wasn't enough buyers. And we've seen that continue in the following or subsequent 2 trading days. In fact, the share price was over $4.50 when they released this announcement on the 12th of May, and has now fallen back below $4. It just shows you how powerful negative sentiment is, and it also shows you how powerful human psychology happens to be, because all these shareholders who are viewing this company as a dog stock simply because the share price is lower from when they bought in and want to sell out, and that just shows you that there's a lot of resistance still in the market for EOS. And this is why I want to see a period of consolidation, the share price moving sideways. Because when you see a period of consolidation, a lot of these sellers or potential sellers will have the opportunity to sell. And as those sellers dry up, that's when you get the breakout in the share price in 3 months, 6 months, 9 months on positive news or potentially positive news. And that's always why I like to see a consolidation period, to weed out all those weak holders who want to sell out simply because the share price has decreased from when they bought in. That is all I've got on this update and Appendix 4C video for Electro Optic System EOS. If you have any questions about this company or any other company on the ASX, or even just have a comment, maybe some constructive criticism would be helpful as well, leave it in the comment section. I'll answer anything you have to say within the next few days. So the last thing I should say is I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a great weekend. Speak to you soon. See you later. Bye.